Good morning, everybody. Good morning. How's it going? Good morning, Shadow, Chris, Greasy, Rich, David. Good morning, y'all. Hope everybody's doing all right. Let's see here. I'm running a little bit behind today, so I got to finish up a couple things here on my chart. But we probably will have a good day today. We'll see. Where's my daily? There we go. All right. Last thing I need to add on here is my midnight opening price. Where's midnight candle? Here we go. Midnight open. All right, here we go. On the daily chart, we got that fair value gap. As you can see, we did not do an immediate rebalance that I was looking for. We never even touched the inversion. So we have an overlapping inversion with a new fair value gap on the daily chart there. So that's going to lead me to be bearish. I will be bearish. Now, I am watching this swing right here. I'll watch the midpoint of this wick. And then if we can take all that out, we should run through this ultimate sell side liquidity there. Will it go straight there? Will it be today? Will it be this week? Probably not, but it could. So let's see. I'm going to measure out that wick right there. So I'll be watching this swing that I marked as a daily swing, this swing that I marked as a daily swing, and then this mid level here of this wick. Let's see if I can daily wick mean threshold. I'm going to move that to the, oops. Text to the right. There we go. Okay, so that's on the daily. Then I'm going to pop over to the 15-minute. So I'm looking at on the 15-minute. We have clear buy-side liquidity over here. We ran up, made equal highs. Big 15-minute fair value gap right there. So clear buy-side liquidity. At the moment, we have sell-side liquidity right here at the low. We also have this 15-minute fair value gap. We have this one that got inverted. All right. And then other than that, I want to see what we do in here. Internal range liquidity. We could reach right down into it and then head up through buy side. Or we could just blow right through it, sweep sell side, and then go to buy side. We have clear buy side liquidity. I'm thinking more so along the lines of we trade into this one and then head up through buy side liquidity. I don't really think, because we traded pretty well down here to the short side. I don't think we run down and sweep, but always a possibility. I would like to see internal range liquidity, sweep buy side, and then expand down throughout the day. Then we have over here looking left, clear buy side liquidity up here. All right, so we may see, I would not be surprised if we see it run all the way up there and sweep that. Doesn't have to, but that's a possibility. So I will be watching that. And then we have 10 a.m. news. So that's pretty much my framework of what I'm looking for today, or looking at, watching. Move this up here. Keep my financial juice up, just in case. Now let's get to this 1 minute here. Check for our opening range gap, which we do have. We have the close and then the open. Opening range gap. Boom. All right, 391 to 441. Not quite 100 points, so we'll see. There's a 70% chance of this trading up through that before 10 a.m. We'll see if that happens. And now we wait. 931. Here's our first presented fair value gap, so I'll mark that. Right there, first presented. I would not short that first presented fair value gap. And that's also why I don't trade the first presented fair value gap. I look at it as a baseline. So we do have 10 a.m. news, so we can't forget about that. Now, if we take this buy side liquidity before 950 or before I get a chance to take a trade, that's where I'd be looking to short. However, if we're still down here by 950, then I'll be looking to long through there, up there. As you can see how we traded right through this 15-minute fair value gap is balanced now. It's nice and balanced. As you can see, it traded through. Morning. Let's see who joined now. We have Corey, Max, Abel, the Oracle. Morning. Waiting is the hardest part about trading. Yes. It is hard, but once you are sold out on your strategy, on your money management and everything, it becomes easier through time, but it's never always easy. That's for sure. Good morning, Binge. How's it going? Working yesterday? Dang work. All good. Yep. Julian, good morning. Good morning, y'all. Let's see. I clicked the wrong button here, and it's opening up. Okay, good. I accidentally clicked a button to open up my a different screen recording device that I have, and I was just hoping that it wouldn't mess up my stream here. Click. All right. $10 a.m. news. Can't forget about 10 a.m. news. Nice, Binge. That works. Julian passed first 3 evals yesterday. Awesome. Congrats. That's great. Yep. When you pass those evals and you get those PA accounts or whatever, whoever you're using, just remember that's the time to maybe even size down a little bit, be a little patient, and trade well. Yeah, we got some nice volatility here. And because we have that news, let's see, let's pull it up here. Consumer confidence is going to be the news that you can see it's a medium impact orange folder news, but because of the times and the economic, factors right now and everything going on, consumer confidence is going to be it's it's going to move the market, I believe, more than what a normal red orange folder would do. So I would not be surprised if we don't really do too much until 10 a.m. Yeah, Julian, just make sure you know the rules. Um, but honestly, like people that don't YOLO, people don't that don't gamble, people that don't over leverage, people that just trade and use proper money management and trade like they're trading a live personal account, those people never have issues with Apex. It's the people that over leverage, the people that move their stops, the people that keep DCAing until price comes back. That's when those people can get, hammered. That's what I always say. If you just trade like you're trading, like as if you were trading your own money in a live account, then you'll be fine. Because people that, which I understand, I get it. Like a lot of people trade prop firms differently than they would their live account because it's less risk, right? That's like why we go to prop firms. But the prop firms don't want that. And it's being pretty clear. And it's not just Apex, it's Top Step now. It's a lot of prop firms, even Tradeify. Everybody's been talking about it. And they're having clear paths to live, all those different things because they don't want those prop firm type traders anymore. So luckily for me, I've never been that. That's why I've had the same accounts for, 10 months now or getting close to a year, however long it's been. So all right. Yeah. We're just waiting here. As you can see, we're in this little accumulation area. It's not gonna, I don't think we may not do much until 10 a.m., but we'll see. We just wait. Today is the 25th. All right. No, they don't binge. They don't allow you to deposit your own money. No prop firms do that I know of. What size account do you have, Julian? Yeah, David. There's a lot of buy side liquidity for sure to be taken. So it depends on how much the market wants to expand. You know, it could keep going. I've seen that, and then it take multiple weeks to come back up for that buy side, just depending on everything going on. But that's why we continue to read the charts and see what happens here. We have if we look at the higher time frames, we have a 1 hour. We have this big 1 hour fair value gap. We have this 1 hour fair value gap here as well that we did touch at 8 a.m. We hit that, and now we're expanding. And if we displace through this low with another fair value gap here on the 1 hour, we'll just continue going down. So that's sometimes where the higher time frames really play a part. The 4 hour, isn't quite there, but the 1 hour, we'll see what happens here. Now we're sweeping that sell side. Julian, all three are 50Ks? Yeah. So like me, obviously it's just me. 50K accounts, brand new, fresh 50K accounts, I trade 2 to 3. I start with 2 to 3 micros, but that's just how I trade. Typically I'll start with 3 micros just because I'm fairly consistent already. I'll start with 3 on a 50K. What would you recommend for depositing your own money? So personally, I would recommend Ninja Trader Brokerage, number one, because their margins are really low. And if you have other prop firm accounts, you can copy them all together. If you're only going to trade a live account and you're not worried about copying to prop firms, or if you're going to trade them separately, then AMP Futures is really good as well. And they have low margins like Ninja Trader. Everybody else's margins, whether it's Interactive Brokers, Thinkorswim, Trade Station, all these other ones have higher margins. Everybody else has higher margins. Meaning, and when I say higher margins, that means because in order to place a trade with one contract, you have to have a certain amount in your account. Or else if you take a trade and that amount is not in that account, for example, if you need, say, $1,000 to trade one mini for NASDAQ, for NQ, and let's say your account, even if you're in a trade and it dips under that $1,000, they will liquidate that trade, close out that trade, and charge you probably like a $50 fee is what most of them charge on top of, that trade, win or loss. So you definitely got to watch the margins. So that's my 2 recommendations: is Ninja Trader Brokerage or AMP Futures. All right, 950. We have this little fair value gap here as we're sweeping these lows. I will watch this fair value gap right here and see. As you can see, we reached up into it and continuing, But I'm going to watch this one, London low, and see if we invert that. And here's that swing low on the daily chart. I'm pretty sure since we're so close, we're going to trade sweep that as well. Yes, those two binge you can connect to TradingView as well. So that's also why I like those. Another reason why I like both of those. There's others you can connect to, but they're gonna have much higher margins, and especially if you're like most people when they start a live account, they don't just throw 10 grand, 20 grand into a live account and start trading. Like most people start small, so you want to be able to have as much margin available as possible. Yeah, the opening range gap has not been touched after the open. Well, it did touch the low of it at 936 right here and just come down. So we'll see. I mean, there's still a chance it trades up to it. I mean, it never reached the midpoint of it. So we'll see. We'll see how far this wants to run down. Here's that midpoint of that wick on the daily chart right here. We'll see how far. But like I said, we have 10 a.m. news. So we'll wait and see what happens with that news. If we come back up at this point, my model is only looking for a long. If I don't get a long, I don't get a trade today. And I just try to keep it that simple, honestly. Now, if before running the sell side, I could have looked for a long or a short. However, no short presented itself. See, that's the sound. That's the scariest sound in the world. I don't know if y'all heard that. Connection log. It reconnected, but let me see. Let me check the log and see. Okay, that was my live data feed. That was not rhythmic. So we're good. Nope. I have a VPS. But that was my live data feed. That's the only bad thing. Every now and then CQG does that. So whether I was on VPS or not, that would have happened. But 100% reason why you own a VPS when you're not hardwired into a 2500 gig internet connection. It was a split second. I don't know. All right. So daily swing low right there. Fair value gap may be getting inverted, which first sign of a market structure shift. Fair value gap getting inverted. We do have a 5-minute fair value gap right here as well. Okay, will we invert this? Yes, we got the inversion here. This is not an entry for me, though. First sign of a potential end to this little sell-off there. And I would like to see us trade back up through this because that's 5-minute fair value gap right here. And that 1 minute, and this was the sell side, and this the London low. So I would like to see us come back up into this range. And what I'm going to do is measure out if this is our low for now, this high where the buy side liquidity is right here, where I have that buy side, to this low, put my range fib where it just has 4 quadrants, and here's equilibrium right here. So first presented fair value gap would be a nice target. If I get an entry. However, news is coming out in less than 2 minutes or 3 minutes. So that is a little scary. I hate taking trades right when used. So here's complete inversion here. Here we may get a little fair value gap right here if we can hold it open. Now, I don't think we just run right up. I think what will happen is we hit this, maybe overshoot it a little bit, and then news, maybe even pop with news, but then pull back to this area and then go. We'll see. At 5, 4, 3. Let's see if we get this fair value gap here. I'm not going to get in it yet just because we have news, and news can make it do weird things. I mean, I would love this entry right here to go long, but with news, I've seen it too many times. Wicks do the damage. Remember that. Wicks do the damage. So it could wick through anywhere, wick through this low, do one more shot. I mean, I got to wait for the 10 a.m. news. And if I miss it, a trade because of that, I can't take that risk. I just can't. Tramp asked, where do I go to learn your system, fair market? So it's actually not my system. This is what's called ICT concepts. And I learned from, his name is Michael Hedison, but he has his YouTube where he has his mentorships for his ICT mentorships. I'll put a link here to his channel. I recommend, if you're going to learn, while we're waiting for news here, I'll put his playlist for where is it? What I recommend studying to start. Is the 2022 right there. It's his 2022 mentorship. That's where I recommend people to start. Since October of 2023, that's when I've started learning ICT strategies. All right, news is out. See this little fair value gap here now? I want to see this get inverted. Right here, this little bearish fair value gap. We're inside this inversion still here. It's not quite holding up or doing anything. Oh, okay. Yeah. Justin, FYI as well. What are you referring to, Shadow? Now, We could, if we do come up and invert this and come back up, this could be forming. Again, we could just keep going down. But if we do come up, we'll have a bullish breaker where we have a low, high, making a lower low. And then if we make a higher high, that'd be a bullish breaker. So at this point, it's still barely 10 o'clock. So we just have to wait. Be patient. We may run down to this orange line here, which is the mean threshold of that wick, the middle of the wick. And at this point, here, I'm going to get rid of these because they're gone. At this point, I'm just waiting for it to draw somewhere, invert a fair value gap, and look for a market structure shift and a long somewhere. We do have a 15-minute fair value gap up there. Right here's a 15-minute fair value gap. All right, watch this fair value gap now. This one. This 1 minute. Do we invert that one? And if we can invert this one and start making our way up, that would be a beautiful setup, because then we'd have a breaker, we'd have an inversion, we'd have a fair value gap. It would probably leave one somewhere. That's 3 PD arrays. And then this could be a bullish order block potentially if it comes up. So we may have what I call an A+ no-brainer setup if from around this point somewhere we can head up. However, price right now is stopping in the middle of the nowhere. So now my job is to see why, and it may not stop, and there may not be a reason for it to stop yet. So I have to look and see if there's a reason for it to stop where it is right now. If not, then we're going to sweep, head to the middle of, or this orange line that I have. And we have a 4-hour fair value gap right here as well. So I don't really see much of a reason. We have this midpoint of this wick. I don't really see a reason for price to stop exactly where it is right now. I'm going to put this 4-hour fair value gap right here just so I can have something to watch. Here, let me just look and see what the middle of this wick looks like. The middle of the wick is right there. I don't see why we stop right where we are right now. It could, but I don't really see a really big reason why price would just stop right here. So because of that, now if it inverts this fair value gap and does everything I just said, okay, cool. But until that, I think we're going to drop down a little further here into this area. And at this point, because we have that 15-minute fair value gap, if we do make our way up, that could be a target as well. Is that the opening bar? Well, that's the opening bar. Here, let me go to the 15-minute to show you. This is the opening bar fair value gap. So, and it's right below that first presented. So if it does reach into here, I think it'll wick through and hit that first presented. But no longer, I'm going to lock in this opening range gap now, because no longer is it a high probability of it trading through it. It could maybe later today or this afternoon, but not for this morning session. So this actually could have been a short right here to take it right down into here. 27. I mean, you could probably get 100 points in that. Which that's not my model, so I don't take that trade. But yeah, right up here, the midpoint, see it respected that 231. The high of this is around 156. I mean, that's a nice move right there. But I stick to my model. Can you show me how to identify the opening range gap? Yeah. So I like to look at the 1 minute chart, but all you do is if you're on TradingView, you have to click right here on the bottom right where it says ETH. You click that to regular trading hours, RTH. And no matter what trading platform you're using, you should have something like that to be able to change the trading hours. So you just want to go to regular trading hours. And when you click that, that's when you'll see this gap. And the gap is from the previous day's close right here until the morning open at 9:30. So it'll cut out everything in between is basically what it's doing. So you'll just see where it closed the afternoon before and then opened the next morning. And that's your gap. You just measure out where it closed and then you measure where it opened. And then have the midpoint of it as well. And that's it. Yeah, so the general rule of thumb is if it's less than 120 points, you can expect price to fill that gap. There's a 70% chance that price will go back and fill that gap by 10 a.m. If it does not do it by 10 a.m., then it's likely to not go back up and fill it until maybe the afternoon or the next day. But if it's over 120 points, then you don't expect it. You don't need to expect it to fill the gap at all that morning. Maybe it could trade into it. Maybe it can reach the halfway point. But otherwise, you don't expect it at all. You'd really expect it just to maybe touch the, like, let's say if it's going down, touch the low of it, maybe trade into it just a little bit, and then just continue from there. So in those cases where we have a 120 point opening range gap or more, that's the days that I don't necessarily look for my model, my reversal model, because price might not reverse. Now, if it just really depends on the framework, because if we're already up here like today, and let's say this opening range gap was more than 120 points, right here at 936, where we tapped into it and then came back down below the first presented fair value gap, I would have just be looking for a short to run through sell side. I no longer would be waiting for it to draw and then come back up. But because the opening range gap today was less than that, I was waiting for it to draw down and then come up. So again, here, accumulating a little bit in this area. I'm not expecting price to just invert this gap and head up yet. I think it may reach up here and then continue down. Now, of course, if it inverts this gap, I'll have to rethink it, but I don't like price shouldn't just accumulate right here and stop right here for no reason. This is where I'd expect it to touch inside here and continue distributing lower. Oh, we also have a 5-minute fair value gap right there now as well. Another reason why price will probably continue down. And that's fine. I mean, like, look, it hit the middle of that 5-minute gap right there perfectly. That's where another short could be, right down into this area. It's just not my model, so I don't take it. And the reason why I do that too, even though I believe that's what will happen, the reason why I don't take it is because if I do and it loses, then I get mad at myself. Like, why did I break my rule? Why did I take it? I shouldn't have taken it. If I would have just followed my model, I'd have been fine. I'd rather no trade than a loss on something that's not my model. But, maybe down the road, I go ahead and add that into the tool bag. But for now, I don't. Because the reason, and another reason too, is because I like to continue doing what works for me. What's gotten me paid, what's been consistent, what continues to work for me. It's doing what I'm doing. I don't have enough stats. I have almost a year's worth of stats, right? For my model of data points for myself. So that's what I know I can go off of. If I start doing other models, then I have to track that separately to see what are the data points on that. This is why journaling and tracking and chart review is so important, because then you can know what works, what doesn't work. And then maybe, later I do add in a couple other models and I can track those separately. And then maybe one is like a higher, maybe one of them is a 70% win rate. Maybe another one I can get a 2 or 3R, risk reward, maybe. But I don't know that until I do add a model and then track that data. And then once I have enough data, then I can look back and say, ooh, this model is working better than this one. So those are the things you stack and build upon as you're progressing through your trading, journey. I've stuck to one trading model, one entry model. And anytime and this is how I know this is the one trading model I need to stick to, because I've dabbled into a couple other ones. And whenever I had the one set, I'm like, okay, cool. I have this one set. Well, because I know where price should be going, here, I can enter here. I can do this. I can do that. And when I log my trades and I go back and review, and I see that those have messed up my statistics when I combine them with my other model, and I can see it's clear. It's like, okay, well, I'm not consistent with these other ones. Let me just focus 100% back on the one that's the best. Let me focus. Oh, wait. I thought the sound cut off. I'm like, let me focus back on the one that's consistent and I'm the best with. So that's how I know. Like, I've dabbled into other ones and it's messed up my statistics. So as you can see, this one would have worked, but it's not my model. We're about to get another 15-minute fair value gap here too. And because of that, I know there's going to be days I'm going to miss out on trades. I'm not going to get a trade, and I'm okay with that. Like, I'm 100% okay with that. And you have to be too if you're going to do something like that. If you're going to try to stick to something, you have to be okay with not taking trades. That's a good question, Stingray. So Stingray asked, how many days of statistic data do I gather to stick to that model? Let me think about that. Here, let me erase this. It's actually a really good question. I think I don't have a number really, but I do like at least, because you want a good sample size, right? Like, I wouldn't go off of a week for sure. I would say you'd want at least 30 days, 30 trading days to have enough, like 30 trading days. It doesn't have to be 30 calendar days. Like, I think if you have at least 30 trading days, it's good. The more, the better, obviously. But I think as a starting point, you'd want at least 30 trading days, especially because if you think about it, I only take. I keep hitting this mic and it keeps cutting out. But anyways, if I take one trade a day, then I'll only have 30 trades to analyze, which I think that's a good starting point. But looking at it that way, I like to have as close to 100 as possible. I know that takes a long time. So, but I think if you start off with 30 trades, 30 trading days, that's a good starting point to know, okay, my win rate, you want to know what your win rate is and what your risk reward is. Those are like the two most important statistics. Yeah, well, so I basically, and I still take low hanging fruit. Um, Meaning I want at least 35 points, around 35 points for my winners. If I have enough room for 35 points or more, I'll take the trade. So even when I'm building up and I was, wow, look at that. Hold on a second. I just realized my Ninja Trader crashed again. It's the second time my Ninja Trader has crashed. It's like completely closed. What is going on? Yeah, my Ninja Trader is completely closed, crashed. Yeah, so as I'm building my accounts, hold on a second. Let me get my Ninja Trader back up and going. I don't know why it crashed again. Rhythmic is taking a minute to connect. There we go. Yeah, it's not a. I don't know what's going on. Okay. All right. So, seeing here we go. This is where I was saying it's likely to trade through. Now, this is my last resort. It could trade down further to here too, but this area here is where I want to see if we can invert a fair value gap and start and do a little pullback somewhere. Because if we go to the 15-minute chart, straight down, we have not had a pullback to any fair value gaps yet. So do we continue down? If we just still continue down, more than likely it's going to be too late for me to get an entry. Because if we head down here, it'll likely be closer to 11, and that's my cutoff. Really, my cutoff is around 10:30, 10:40. If I don't see anything setting up, I'm done. And if we just keep selling off to around this area, it'll probably be around that time, and I just won't take a trade. However, this area that we're in now, if we see a market structure shift on the 1 minute and a pullback up to, say, this 5-minute fair value gap area or this 15 minutes, we have not had a pullback to the 15-minute. If we start doing that around this area, then that'd be fine. This is kind of like the last opportunity I have for the morning. But anyways, yeah, when I was building my accounts and adding new PA accounts, I was just looking, and I still look for the same thing, really. 35 to about 60 points is going to be my profit that I'm looking for. If it's a trade where it looks like, hey, I'll probably get 60 points or more on this thing, then I always, once I'm around that 30 to 40 point profit area, I'll definitely move to break even plus, a little bit, 5-10 points to cover costs and commissions in case if it turns around on me. But yeah, that's pretty much just, I do the same thing. Yeah, I hover around a 60% win rate. Not quite a 2-to-1 risk reward. I'll be there sometimes, and then because my profit ranges around 35 to 60 points, it'll fluctuate between 1.5R to 2R. But even then, 60% win rate at a 1.5 to 2R, I mean, you're going to make money. Plain and simple, that's the number. That's why I like putting the probabilities in your favor as much as possible and having a strict money management plan. Because when you do that, that's when the probabilities are in your favor. And as they say, that's when you can become the casino, right? Like, as long as probabilities are in your favor over time. And that's the key also of why you can't trade too large, because the probabilities, if you're at a 60% win rate, right? 40% of the time you're losing. We don't know the sequence of those 40% losers. They could be 3 days in a row, 4 days in a row, whatever it is. So if you're trading too large, that's when you can blow the accounts during that sequence. If you're trading, right, where it's not too large, you will sustain those times of the 40%, no matter what sequence. And then when you get those 60%, because you might have 5 days in a row winning, and then that's when your buffer builds. So that's why it's important. And even when my accounts were well above the threshold, and I have extra padding, like, I still did not increase contract sizing. Just kept it up, because when that losing streak comes, you don't want to tank it, right? So my thing is, like, for example, the 150K accounts, you need $5,100, right? So I wasn't looking to add any contracts on top of what I start with until I'm over 10 grand on those accounts. At least 8 grand. That's kind of when I want to start. But then if I bring it back down to that 5,100 because I'm losing, I'm definitely going back to my normal starting point. That's kind of like how I manage it. Yeah, I saw that too. Extreme fear in the markets right now. Even crypto's been selling off, but I've been looking at Bitcoin and waiting for it to get in the lower 80,000s to 70,000s. So I don't trade crypto, but I think holding Bitcoin is not a bad idea, and just buying at certain areas. And I've been eyeing, here, look, while nothing's going on, real quick, I've been eyeing this right here between 70,500 to 85,000. And look where we're going. Just saying. If there's any Bitcoin holders or people that like to buy and accumulate Bitcoin, might be getting close. And it's looking more like I might not be getting a trade today, to be honest. We didn't invert that 4 hour. We just traded through it. Still 3.5 hours before that bar closes. We may see it just continue on down. But see, that's also another thing. Like, I know I've been talking a lot about sticking to my trading model, and all that. But that's what allows me also to be comfortable in trades and not hesitate to take trades. And where if I'm in a trade, I can accept some heat, things like that, because I know what I'm looking for. And if you keep it, and if you're able to take that desire, that need to trade every single day away, if you could take that away, it helps so much, because then literally all you're doing is waiting for exactly what you know you should be waiting for. If it's there, you take it. Win or loss, boom, you have your money management. If it's not there, there's nothing to take. It's that simple. Like, trading is simple if you break it down. However, it's extremely hard because we're all human. So there you go, Tramp. Tramp has cash waiting for the dip. There you go, Jan. No edge. If your model doesn't present itself, that's simple. But it is hard. Yeah, the hardest way to make easy money. That's 100% true. But it is hard because you want to make money, right? Like, we're here to make money. People don't go. See, this, okay, real quick. This is why I say you need to treat trading like a business, not a job. Because people don't go into work and clock in the morning and then leave work at night when they're done for the day without a paycheck. They get paid, right? They put in their time, they get paid. However, a business owner does not get paid every single day. Every single day is not a profitable day for a business. But are successful businesses profitable? When are they profitable? Over time, in the long run, right? They might not be profitable that day. They might not even be profitable that week. But if it's a successful business, they're probably profitable every month, and they're most likely profitable every single year. Most weeks, yes. A lot of days, yes. Not every day. So that's why I always say treat trading like a business, not a job or a hobby. And if you do that, it's okay to not make money every single day, to not take a trade every single day. Got a new 5-minute. Yeah, I think I'm going to call it a day. We got a new 5-minute fair value gap, and today's only Tuesday, right? Yeah, today's only Tuesday. So if it was Thursday or Friday, then we could have something happen in the later morning hours. So Thursday and Fridays, you could have a reversal or a move or something happen around the 10:50 macro, 10:50, 11 o'clock, maybe even a little bit later, but before 12, before lunch, you could have something happen. But Monday, Tuesday, and Wednesday, typically not. So what could happen is before lunch, we may still continue to sell off, but we'll probably establish some type of range between 10:45, 11 o'clock through 12. And then the afternoon session may have some good move, maybe. So, but for me, like I said, I have to limit my trading. I don't trade afternoons. And it's all personal because of trying to, not do anything stupid. So if it's not there in the morning, it's not there. It's not there. And if you think about it, another thing to think of, let's say you only get 2 or 3 trades a week. And this is why having multiple accounts and leverage is so important. If you get 2 or 3 trades a week, and if you have a personal account, let's say you make $200 or $300, that's good. If you can do that every week, that's great. That's over $1,000 a month. What could you do with an extra $1,000 a month? Great. Could you earn a living doing that? Could you live off of that? Most people, that's a no. I don't know anybody that can live off $1,000 a month, cover cover all expenses, where you live, everything. But if you do that times 20 accounts or 10 accounts, and I know not everybody's there yet, but that's why I think it's so important to get there. Yes, you probably could, because $1,000 times 10 is 10 grand a week, right? Now, it's not going to be right away, but once you get those accounts padded and up there and you're holding them up there, and if you're only, I say only, but if you're making only taking 2 to 3 trades a week or per day, I mean, not per day, but if you're getting 2 to 3, days in and you're able to make that amount, 10 grand a week, hey, then we know we can take a payout if you're trading Apex every 8 days. There's some other ones, different days, whatever. But most prop firms, you could take at least 2 per month. Once you get those accounts up there, if you're patient enough, build them up, get them up there, right? And then you get them to a point where you can be able to take 2 to 3 trading days per week, but still take 2 withdrawals per month. What else do you want? Yes, yes, you want to make millions, but can you make a living doing what I just said? Most people, that's a yes now. And like this month, let's see here. What month are we in? February. I haven't taken that many trades this month. I've taken 1, 2, 3, 4, 5, 6, 7, 8. I've only taken 9 trades this month, and we're on the last week of the month. But this is my point. Can I move this? I'm using a different little snipping tool here. 1 second. I just want to show like what I was talking about, being patient. Being patient. I've taken 9 trades this month, right? But this is the beauty of multiple accounts. 24 grand, 66% win rate, profit factor of 2.8. Like each week has been 9 grand, 9,500, or actually let me just do this. This is easier. Each week 9,500, 9,500, 4,700. Like, I mean, and once your accounts are at a point where you can start withdrawing that every 8 days or whatever, like, can you make a living off that? Most people can. If you can't, I mean, hey, everybody's situation is different, but just saying. Yeah, there's no trade for me today, so. Question before I go. All right, what would be my goal trading 3 micros as far as points per trade? Well, Julian, it depends on how you trade. So for me, the way I trade and the model I look for, the contract sizing does not matter. The contract sizing, the only reason that plays into a part into how I trade is depending on the account balance, the size of the account. And that's also why, like, I talk about not having money on your chart. So like if you're in a trade, not looking at the dollar amount, I look at everything in either points or ticks. I don't calculate dollars, nothing. And the reason is because I don't want the contract sizing to matter to me. If I have a 300K account and I'm trading 1 mini, or if I have a 50K account trading 2 or 3 micros, everything on the chart is going to look the same to me. And so because of that, how I trade is I typically, no matter what, I'm looking for 35 to 60 points. So just account size is what matters. So if 35 points times 4 ticks, that's 140 ticks, right? And if you're trading 3 micros, that's $1.50. So 140 ticks times 1.5. Basically, you're profiting about $210. That's about what I would look for. And then my risk would usually be around, I try not to risk more than about 30 points roughly, like as a max. So that's 120 ticks at $1.50. So that's slightly better than a 1-to-1, but that's like as a worst case, right? And that's why I average around a 1.5 to 1. So, and the way I look at it too, a 50K account, you have $2,500 cushion. If you're risking no more than about $180, that means you would have to lose almost 14 trades in a row to blow that account. And that's how I look at it. And that's a good cushion for me, because if you lose 14 trades in a row, there's something else going on. You need to have a better strategy or study or figure out what's going on trading wise. But other than that, you should be able to sustain that. And that's kind of the way I look at everything. And then the contract sizing, like I said, if I have a larger account, if I have a $150,000 account, I start with 6 micros. If I have a 250, I start with 8 micros. If I have a 300K, I start with 1 mini. That's kind of like what my starting point based on the data that I have for myself. How old am I? Yeah, I'm 65 years old, Chris. Nah, if I was 65, no, man. So I'm turning 40 this year. The big 40s hit me this year. I'm 39 right now. Man, if I look like this at 60, I'd be happy. All right, y'all. I'm gonna head off here. Yeah, it's pushing up, and it might go up, but I don't, like I said, I'm not very confident just yet. It'd have to break this area. I mean, it may start pulling up. We have another 15-minute fair value gap right here. So maybe it pulls up into that. That'd be the first pullback. But we also have all this smoothness down here. It could reach right back up into here and then come back down and take out this smoothness if it wants to continue. Because time, remember, trading this way, time and price, the two most important things, right? Time. On a Monday, Tuesday, this late in the morning, yeah, we might see a 1050 macro. It may push up from here, but it's pretty late in the morning. It's a lower probability, in my opinion. It's not quite 11 yet, so it could happen. But we have this area here, and there's not too much room to keep going up. Like, there's no displacement here, so I don't like it. But anyways, all right, y'all. I'm gonna head out, hop off here. I'll be back tomorrow. As always, thanks for joining. Hit that like button. If you're not subscribed, please subscribe. And I'll see y'all tomorrow. Trade well, everybody. Take care.